Welcome back. It's time now to take a look at the top business stories. Dubai World signs final agreement on its debt restructuring. Officials of Abu Dhabi nuclear program unlikely to make any changes to plant plans. And German foreign minister says Germany will be there to support Portugal. Let's look at the equity markets first. Both UAE stock markets ended the session in green territory. Today, Dubai's benchmark gained 1.5% to close at 1,552 points. The real estate sector posted the largest gains. But the share to rise the most was jewelry maker Damas. Its share surged 25% today. Drake & Skull rose 1.9%. And Emaar Properties gained 3%. Dubai Islamic Bank was up 1.4%. Du gained 1.6%. 275 million shares were traded, valued at 371 million dirhams. And over in the capital, the ADX rose 0.2% to close at 2,633 points, with the real estate sector, like in Dubai, posting the strongest gains. Alder Properties rose 4%, Suru Real Estate 4.2%, and Rack Properties was up 2.6%. The banking sector was mixed. Abu Dhabi Islamic Bank rose 1%, Bank of Sharjah gained 0.6%, but First Gulf Bank dropped 1.8%, as did National Bank of Abu Dhabi, which fell 0.7%. 112 million shares were traded, valued at 156 million dirhams. And now let's look at the GCC markets, which ended mixed today. And to talk about the markets this week, we're now joined by financial analyst Bruce Powers. Welcome to the show.
Thank you.
Bruce, we just saw it on the graphics. Egypt's stock market fell 4% today, already 9% yesterday after having been shut for 7 weeks. What is your opinion? Are stock valuations so low that now is a good time to buy?
Well, you know, the good news is that the exchange reopened and it will be able to stay on the MSCI Emerging Markets Index. This is an index that's used by many institutional investors. Now, MSCI has also said that Egypt could still be removed if there's too many frequent trading interruptions. Now, we've seen the index move into extreme oversold conditions, dropping over 12% in the last 2 days and down 32% from the most recent high prior to the unrest. Some good news is today we saw twice as many gaining issues as we saw declining issues. Now, this is usually looked at as a bullish sign. So that, combined with the extreme oversold condition, would indicate we could be very close to a bottom that could see a very decent rally. And looking at the blue chips and companies that have good overseas exposure would probably be the way to go.
Let's look at Europe a bit closer. Portugal is making headlines. Its Prime Minister, José Sócrates, resigned. It makes everything look like a bailout of the country is more likely. Tell us, is it inevitable or not?
Well, it does seem pretty inevitable. I think it's only a matter of time, and it may be a very short matter of time. Now, the rejection of the Prime Minister is indicating the country has rejected the austerity measures that he wanted to implement. There's a very high risk that there'll be further downgrades by the rating agencies, and the country will be forced to pay even higher interest rates on any new debt. Now, the only way they're going to be able to get new debt, and this happens every month, every 2 months or so, at an acceptable interest rate, is to take a bailout. So, unfortunately, they need a new government in order to close a deal, and that remains to be seen how that's going to go. So, I think we could see that process start towards a bailout in the next week, even days possibly.
Okay, thank you very much, Bruce. Have a good weekend.
Thank you.
And on to our top stories. Dubai World signed a final agreement with its creditors to restructure all of its $24.9 billion of debt. The agreement included about 80 or 99% of the conglomerate's creditors. Dubai World owns $14.7 billion to financial institutions and about $10 billion to the Dubai government. The state-owned holding company plans to return $4.4 billion to its bank creditors in 5 years and $10.3 billion in 8 years. The agreement includes all of its financial obligations, according to UAE news agency WAM. Dubai bonds advanced after the signing of the deal was announced. Abu Dhabi is unlikely to make any changes to its nuclear plans off the back of the crisis that has hit Japan. The UAE has been closely watching the nuclear disaster. The UAE's representatives of the International Atomic Energy Agency said there will be more investing into systems and the re-evaluation of shutdown procedures, as well as backup systems. Engineers assured that reactors will be perched 6 meters above sea level. Experts behind the $20 billion nuclear program have taken into account the possibility of earthquakes and tsunamis and say that there will be more investigation into the issue. Meanwhile, the CEO of Emirates Nuclear Energy Corporation, Mohammed Al-Hamadi, said the UAE's nuclear ambitions to deliver electricity to the power grid by 2017 are on track. DP World released its net profits for 2010 yesterday of $450 million, which the company says has put it on track to list on the London Stock Exchange. They say they have admitted the result to the exchange and are now waiting on the process in London, which will decide on its listing soon. The company's CEO, Mohammed Sharaf, says DP World plans to list in the second quarter of 2011. The company attributes the rise in increased trading volumes and improved terminal efficiencies. And in our fast financial news, the Middle East petrochemical sector is set to register up to 23% growth in revenues and profits this quarter. That's according to a report released by Global Research. It revealed that the region's growth will be attributed to favorable prices of related products and a 12% quarter-on-quarter growth in production volume. Etisalat has not ruled out expanding into Iraq after dropping its $12 billion bid for a stake in Zain that would have given it access to the market. The company's group vice president, Ahmed bin Ali, said they are looking at all opportunities. Etisalat is pushing to expand its overseas operations to offset declining revenues in the UAE, where it has no longer got a monopoly. Emirates NBD approved the distribution of a 20% cash dividend at its annual general meeting yesterday. That makes 20 fils per share. UAE's largest listed bank earlier reported 9.7 billion dirhams in income. For last year, customer deposits rose 10% to 200 billion dirhams. And after the break, we'll run you through what's making the headlines in international business today.